Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market prep video for May 1st, 2024. Well, we finally made it to May, but doggone it, the volatility hasn't changed here at all. Still a very, very volatile market, very, very challenging. We had tons and tons of anticipation of big tech reports yesterday. But unfortunately, the bonds did not cooperate, and we continued to see those sellers come in right where we really would have expected them to come in on the charts. So let's take a look at what happened overnight. First off, we had Asian markets mixed. The South Korea and Hong Kong was just a little tiny bit higher. Everything else was down in the European markets overnight, or excuse me, Asian markets. European markets are mostly red this morning. In fact, the DAX is decidedly bearish this morning, down over 1%, but the FTSE is trying to hold a green print here, up 0.08%. This morning. So that's the only one up in Europe. If we take a look at U.S. futures, down across the board this morning, and as a matter of fact, they have worsened just a little bit since I came in this morning and first looked at futures. They have worsened just a little tiny bit as earnings are rolling out. Maybe there was something that inspired those bears to push a little bit harder. We'll see if that can improve here as we go throughout the morning. If we take a look at oil this morning, well, oil really down. Yesterday, some big decisions were made there in oil. Some shorting patterns showed up in oil. That'll help relieve some of that inflationary pressure. But if we take a look, oil at this very moment down $1.12 a barrel at 81 a barrel. Brent is down $1.06 at 85.27 a barrel, and natural gas is coming down pretty sharply here again, over 6 cents at the moment. If we take a look at our precious metals, by the way, gold had a really rough day yesterday in the market, really selling off substantially over $50 an ounce. And if we take a look this morning, we're also seeing just a little tiny bit of bearishness here on gold. Silver is just slightly higher at the moment. Copper is down, but platinum is up. Palladium is down. So a big mix of data here in those precious metals. And then when we take a look at crypto, boy, crypto had a really rough day yesterday. Bitcoin down 3,000 points. This morning, Bitcoin is looking lower by 2,300 points. So a pretty rough start to the day here on crypto, and down basically across the board this morning. So last but not least, let's take a look at those pesky bonds. 2-year bond continuing to hold in there at 5.03%. The 10-year bonds 4.69%, and the 30-year bonds at 4.79%. Not helping us out a lot. And if you noticed yesterday in the economic data that we had, those data points sure didn't help the idea that inflation was going away. As a matter of fact, really fanned the flames there of inflation. So we may have a rough day today as well as we head into the FOMC. So what does all that mean for today? Well, how about we settle in? Let's buckle up. Let's get ready for the Wednesday edition of the Morning Market Prep video. Good morning once again, everyone, and thank you so much for being here. I very much appreciate it. Let's take a look at the charts and see if we can gain a little information about how we may want to approach the market for today. Remember, everyone, that we want to shake off that bias and really look at the charts for what they are, not for what we want them to be. First off, if we take a look here at what happened yesterday, pretty ugly day. We're back down here testing these support areas. Remember, I said it was gonna be a little bit painful if we pushed all the way down into here. Certainly, it became painful. We kept selling after the bell yesterday because, well, we didn't get big tech reports that really inspired a huge upside move. Although they did report well, it just wasn't enough to overcome the bearishness that we're picking up here in the market. So first off here this morning, if the bears can continue to push, you can see we've got these little wicks and things down in here. That would be the first area to test to see if we could break down through there. And you can see over here in this little platform consolidation, there's a lot of congestion in this area. There may be a little tiny bit of price support that we could pick up right across that. And if that were to fail, I'm going to suggest that we have that potential that we could come on down into these areas of the chart and relatively easily, I think, if we were to break this support here in the diamond. So we'll want to watch that carefully if those bears really find reason here today in the data to push us on lower. Now, that being said, if the bulls can find inspiration, well, we've certainly got plenty of information right in here that we could bounce off of this area. And if we were to bounce up here, well, coming back up, maybe testing this resistance right in here would be the logical choice up here toward the downtrend and that resistance area of the chart. So watch that carefully. Pushing on through there, well, I think I'm going to have to put up here another a big black candle resistance area right in there to push up through into that, and then of course right up into here. And I think we're going to need some kind of major change in these bonds and this obvious problem that we have with inflation. We need something to show us some relief along those lines. So watch carefully for that. If we take a look at our SPY, now SP, oh, by the way, I should go back and show you here that we still have a ways to go before we're going to make that 50-day moving average, and that's going to be the case in a lot of these stocks here today. So remembering that we're still below our major moving averages, and this is a failure at a lower high, and we are following that downtrend, at least at the moment. If we take a look at our SPY, SPY also having kind of a rough day yesterday, really pulling back pretty hard, but we ended up the day holding right onto this little upside trend here and trying to hang out there to see if we could bounce back up. This morning, as you can see, we've got a little bit of sell pressure here pushing us down through that trend. So first off, I'm going to be looking at a support down right here, and if we can hold and bounce off of that, we may be okay. If we push on below that area, then I'm going to suggest we come back down, maybe test these lows in the chart. And beyond that, guys, if we start dropping down below that area here, you could potentially see some pretty substantial bearishness coming into the market. We could drop fairly hard. If we find that the Fed is super hawkish, those kind of things, then our next levels down, you can see we can start dropping into these areas of the chart pretty darn easily, and we might even start looking for that opportunity to continue to sink right into that 200-day moving average. Failing at the 50-day here, right where we would expect to see a failure. This is one of my favorite shorting patterns. We call it the blue ice failure, failing right along the downtrend here in the chart. If we take a look at our let's look at the QQQ. QQQ also rough day, pushing back down. We did hold this price support at the end of the day. hung right in there, and you can see we've got a little bit of selling pressure in here that might give up this little trend. If we were to continue to push lower, well, you can see those levels right through here. We might catch that area as a little bit of price support in there, and if that were to break, then we're probably back down here testing the lows of the month of last month to see whether or not those will hold. Now those are some pretty big moves, and you can see probably the area right in here, good little support area, would be that next area down that we might test if we were to continue to fall, and that would be pretty big move for the market. Now, if the QQQ finds some buying inspiration, first off, we need to get back up through here, and that downtrend need to get pushing back up. And if we start pushing up, I'm going to look toward kind of the middle of that big old black candle in there and say we need to breach through the center of that, get up through there. Then we have that little bit of energy and relief that maybe we can start pushing on higher to retest this resistance, and then of course right back up here to retest that recent high on the upside move. You'll want to note here that we're still below our 50-day moving average. We are declining here in the chart, and our 50-day moving average is flat and really starting to roll over toward the downside. If we take a look at our IWM, well, IWM also running into that pain and pressure, and we ended up, if you noticed in these charts, all of these are nasty evening star patterns here in the QQQ, in the SPY, and in the diamonds. Very bearish patterns overall. And if we look at that IWM, well, it's about as bearish as they get. This is an abandoned baby pattern. The abandoned baby pattern is when we leave a single candle all out there all by its own. There's a window on this side, a window on this side, and obviously sent that right on lower here. And that abandoned baby is a very bearish pattern in the market. Now, if we were to continue this selling here, notice we broke that little trend, that green trend that I have in there, broke back down below that a little bit. We broke back down below this little upside trend here in the chart. If the bears can continue to push, I'm going to look for a little bit of price support, maybe right in there, to see if it can hold. If that were to break, then I'm suggesting we're probably coming on down to test some support down in this area of the chart, through here, and even our recent low in that area. If we continue beyond that point, well, I think it's fairly clear we really could start slipping into these major areas of price support down in here. And I think if that were the case, if we start giving up this, we're likely to see the 200-day moving average here on IWM, noticing once again that our 50-day is starting to roll over here in the chart. Let's take a look at our VIX. Our VIX did rally yesterday, but not so much as to really add a little bit, add that terrible much concern to the chart, but we did bounce up here just a bit, up here around 16 handles, just a little bit short of those 16 handles here in the chart. Notice that we did hold on to this little upside trend. We broke this one pretty substantially, broke that down. So the question of the day is, if the bears can continue to push, will we break back up through this area of resistance in the chart and start stretching up toward this major downtrend if we continue to feel that fear coming in the market? So watch that carefully as we push up through and push up into those areas. If the bulls find inspiration, and there certainly is reason that the bulls could come back in and find that inspiration. Remember, we've got an Apple report coming up on Thursday, and there's just major hope and anticipation on that one as well. So watch carefully here. If we were to push back down and break through this support in the chart, or retest this area of support, we're going to see maybe those bond prices ease if the Fed isn't as hawkish as we kind of think they're going to be. But if they're not, then we might see those bonds ease up, bond yields, and we could start moving on lower here without fear, because there's so much hype around earnings. It's kind of amazing anymore. We've turned it into, just a full-on gambling casino when we're in the earnings events, because everybody's predicting something. Let's take a look at our T20s here. T2122. Well, clearly we pushed down pretty sharply here yesterday, and there is a pretty substantial draw going on with draw to the downside here with the FOMC and that uncertainty on here. So I really wouldn't be surprised if we continue this selling this morning, kind of push on down into this bullish reversal zone. And then as we get that FOMC statement, maybe we get something in here that pushes us up, or we get some relief in those bond yields that bounce us back higher. But watch carefully. We don't have a big downside move capable here in the market unless we really pile on from the Fed or something along those lines before we get some kind of relief back to the upside. And notice that we've got a big upside opportunity if we can find that relief in the market. Our T2108, well, T2108 sold off yesterday, but I got to tell you, it wasn't as bad as you would expected for the price move in the market. Percentage of stocks above the 40-day moving average did pull back, and we did lose a little bit of price support in here on that chart. But notice we're hanging in here. There's price support in this area that we're hanging on to. We're still, pretty weak here. 31% of the stocks above their 40-day moving average, but held in there pretty well. What would really start to raise a little bit of fear, I think, is if this were to break that recent low. So far, we're doing okay in that. Of course, if the bulls find inspiration, well, we recovering and coming back up here and testing some of this resistance, certainly possible. If we take a look at T2107, well, T2107 also had a pretty rough day yesterday, pulling back, but again, not as bad as the overall market looked. Rejected this resistance in the chart, but notice we haven't taken out that recent low in the chart. If we were to do that today, well, let's look over here. We've got some pretty good support areas, probably down in here in the chart. There is a little bit of support right here that we can grab onto as well. So not terrible. So far, notice that we're still holding above 50% of our stocks above the 200-day. We'll start feeling a little bit more ugly about the market if we go below 50% of our stocks holding those 200-day moving averages. Let's take a look at our T2101. Now, this was a problem yesterday for us as we continue to see breadth in the market decline, and this was actually going down when we were trying to hold up a little bit in the morning. It was going down. We just didn't have the buy pressure here. What's interesting is we really didn't pick up on breadth on the sell wave here either. And one of the things that I do think is going on, I talked about this on Monday, is that the CTAs have a lot of positions that they need to sell, and they were kind of set to sell in a flat tape, an up tape, and obviously a lot in a down tape. So I think what we're looking at is institutional selling here, trying to relieve some of that overbought pressure that they're probably feeling. And we're seeing a lot of rotation into more of the dividend plays, more of the safety plays here in the market. So continue to watch for that possibility if we feel that bearish push yet today. Those CTAs may still be unwinding some of these big positions that they have. Let's be taking a look at our economic calendar here. Our economic calendar, as you can see, we've got a lot going on this morning. We're going to get mortgage applications here this morning. We've got an ADP number coming in. They're expecting that to come in about 175,000, still much hotter than the Fed's going to want to see on those employment numbers. So watch that carefully. That could add a little bearish pressure if that comes in hot. If we suddenly see a major decline in that, that could inspire those bulls to bounce back. We've got a Treasury funding refunding agreement here, so watch for that today. We've got some bond announcements. We've got a PMI manufacturing number. This is not good. What we're starting to see is even consensus is suggesting that we're softening or staying very, very soft in our PMI, staying below 50. Remember, anything above at 50 is dead even. We're not growing. We're not pulling back. We're not. Our manufacturing is not contracting, and if we kind of stay flat in there below 50, probably not a good sign there on the PMI. ISM is actually suggesting that we move just a little bit lower here on our ISM number, back down to just plain flat in our ISM, no growth going on there. Stagflation, continues to raise its ugly head here in those numbers. If we take a look at construction spending, we've got construction spending. They're expecting that to remain flat. This might be one that could easily miss if you're paying attention to some of these rates here in the market. You could understand why builders might be pulling back just a little bit, expecting consumers to slow. And then job openings report. We're looking at an 8.7 million in here. That's a little bit of a decline from past. That would be a good sign for the Fed to see those jobs coming a little bit more closer back to balance. Petroleum status, a 4-week bill auction, and then of course the FOMC. We are certainly not expecting the FOMC to change rates. They're likely to stay the same. What's going to be interesting today, what's going to drive the market, is listening to Jerome Powell and finding out how hawkish he sounds. Is he hawkish, or does he still come off as a bit dovish? We're going to have to pay close attention to that, and I would expect some volatility based on what he says, not on the decision of the Fed. Then, of course, as we look into Thursday, just keep in mind, Thursday we've got an Apple report that will be in the afternoon. We're going to be dealing with international trade, jobless claims, productivity and costs, factory orders, natural gas report, and then, of course, that Fed balance sheet. So kind of keep those in mind as you plan forward. As we look into our earnings calendar, well, my goodness, our earnings calendar, we're just swamped with earnings today. There's no way I can cover them all in the morning prep. We'd be here until the market opened trying to cover them all. But this morning, we're going to be hearing from MasterCard will be out this morning. We're going to hear from like ADP. We've got CDW in that list. We've got CVS in that list. We've got DD. We've got Estee Lauder. We're going to hear from KHC this morning. So quite a few reports here this morning, all the way down to Yum here this morning. And you can see there's a lot of selling after these reports here first thing this morning. If we take a look at this afternoon, we've got a lot going on here as well. We're going to hear from AFL. We've got TRN. We're going to be looking at TRN, I believe, is this morning. We've got BZH. We've got CF. We're going to hear from CW. We've got Jazz in here. We've got Qualcomm. We're going to hear from Wolf. We've got ZG in here. So MRO will be reporting, MGM is in there, MOS. So a lot of reports here this afternoon as well. Not anything in the major big tech. eBay will be in there this afternoon, so kind of keep an eye on that. So how about we take a look at a few stocks that could be setting up for today. But before we do that, guys, if you could do me that quick favor, if this is the first time you've seen these videos, please click that subscribe button on YouTube. Also click that bell icon when it pops up so you'll be notified every time I post a video. And if you find the videos to be useful or helpful, you can do me that big favor by clicking that thumbs up button, leave a brief comment. That helps the channel to grow. Thank you so much for everyone who does to do that. Takes the time to do that. I really appreciate it. Also, feel free to share these videos out on your social media feed. That helps a lot as well. Let's take a look at a few stocks that could be setting up. And remember, guys, these are not recommendations to buy or sell any security. Do your own due diligence. Be very, very careful here on the market, particularly as we continue to see these bonds causing us lots and lots of trouble here in the market. With that being said, let's take a quick look right here. The US dollar. US dollar really shot up yesterday, showing that strength as those bond yields went up. We saw those economic data points come out. They were inflationary, and we saw those bond yields starting to shoot up. And well, today we'll see if the data points help us out or hurt us here today, but watch that carefully here in the dollar. That's having negative effects on lots of commodities. I mentioned gold, a big pullback as the dollar strengthens. We typically see anything commodities get hurt. And if we take a look at energy, some of these energy stocks really made some decisions yesterday. You can see this is a lower high showing up here now in XLE. At least it held this support. There was enough stocks in there that held support, but there are stocks now that are showing us trend breaks in those lower highs starting to occur. We see things like CVX breaking down, still trying to hold that upside trend overall, but just not very happy in the market. APA getting a report this morning. That's moving down. This is actually now a full-on short in the chart with that failure here at the high. So failure at a lower high and failure at price resistance and a head and shoulders pattern. And I'm seeing a lot of those head and shoulders patterns starting to show up in some of these stocks. So anything in the commodity area of the market is looking pretty rough right now. Now, that being said, when we take a look at some things in the aerospace and defense area of the market, they're holding up quite well. And you can see RTX did pull back yesterday after popping through. It's still in that price range, but RTX still looking very, very good overall. LMT also looking good. Lockheed Martin, keep an eye on that for that bullish upside here in the market. Those are holding up pretty well. Now, I can't say the same for General Dynamics just yet. It is pushing back up. It's still in a question mark, though. Still have that resistance over the top to see if we can break on through, but you know, it's worth keeping an eye on here in the market, watching that one closely. If we were to take a look at refining here just a little bit, there is an incredible head and shoulders pattern here on Valero Energy. That's not looking good at all. That's looking like a sell. Taking a look at Halliburton, I'm going to say the same. Looking pretty ugly there overall. If we take a look at financials, our financial services, feeling just a little bit of pressure yesterday as those yields went up. Obviously, this is putting a lot of pressure on those as those loans and things go higher and higher here in value, and on those interest rates. And you can see starting to show some failure here. And if we take a look at our moving averages, this failed its 50-day moving average here again. So we'll want to watch that carefully. Now, we haven't taken out a low, but this is the beginning of a potential downtrend. When we make that lower high, we'll want to be watching that carefully. If it does make a lower low, then we have a confirmed downtrend. But as you can see, if we were to fail in here, even any kind of rally back, I would be watching for that potential push down in the market if these rates stay where they are. And then, of course, KRE moving down. I don't know. Unless you're really paying close attention and kind of a nerd about the market like I am, you probably didn't even see the fact that a bank, Republic First, was seized by the government and failed, and pushing things a little bit lower here. They're doing everything they can to keep stuff like that really, really quiet right now. But pushing this down, and you can see the KRE failing its 50 again and may soon be taking out its 200-day moving average. So watch those regional banks as well. Other places in the market that you might want to look as, let's take a look at some of the defensive sector areas of the market. Take a look at Colgate Palmolive, really, really strong here. Old, boring dividend payers. Take a look at utilities. Utilities continuing to hold in there strong. Again, old, boring dividend payers. GIS still holding an upside. General Mills, get your cereal here. Could be setting up a potential long. Take a look at Post. Post had a really big pop there. Pulling back, that actually could be a bad tick in the market, but watch that carefully. Still holding in here on the bullish side. Today, we got a report from KHC. Now, this is also in that defensive sector, not really holding up here overall in KHC. We may still hold this trend, but watch that closely here. A lot of these old, boring, simple dividend payers have been doing pretty well. Things like Coca-Cola holding up here. So maybe look to some of that defensive area for some safety in the market. So, by the way, TBT has been on quite an upside. This is a short on the treasuries. Remember, as bond yields go up, treasuries go down, or bonds go down, and we're seeing that bullishness here in things like TBT. I notice SARK again, SARK. This is a short on ARC Innovation, showing a bullish pattern here and possible long. As we continue to see some stress in that tech sector. So with that, everyone, I want to wish you all a fantastic day. Sorry I ran this video a little bit long. I want to wish you all the very, very best. Have a wonderful day, and I will see you right back here bright and early Thursday morning. Take care, everyone. Wish you all the best.